NTPC delivered its Q4 and FY21 earnings print, and the earnings print, when you're looking at it, the revenues fell down almost to 2.5%, coming in close to the 26,567 crore mark. When you're talking about the core EBITDA, coming in close to the 6,500 crore mark. When you're talking about the margins, coming in lower by almost 200 basis points at the 24.5% mark. When you're talking about the profitability, aided by a tax write-back, the profitability came in above what the street was anticipating, coming in close to the 4,480 crore mark. When you're talking about the enhancement of the borrowing limit, the company enhanced the borrowing limit from 2 lakh crore to 2.25 lakh crore. And when you're talking about the final dividend that the company gave, the company declared a final dividend of 3.15 rupees per equity share. Remember, this took FY21 dividend to 6.15, and along with the buyback that the company announced of a smaller quantum, there has been a healthy payout ratio as far as NTPC is concerned. When you are talking about what exactly brokerages are saying, Citi has maintained a buy stance as far as the stock is concerned. They say that the company continues to trade at attractive valuations with decent ROEs in terms of return on equity, continuing to stay quite strong. When you're talking about the receivables, that is something that a lot of brokerages have taken note in terms of how exactly receivables have declined from much more concerning levels, and this is something that is quite positive. The quarter did see a sharp jump as far as other income is concerned, according to Citi. And when you're talking about the capacity addition in FY21, NTPC added 3,364 megawatts of capacity, and standalone regulatory equity grew almost 7% on a year-on-year basis. When you're talking about the valuations, the company's stock is trading at 0.8 times price to book value according to Citi's estimates. Valuation remains attractive according to them, with a 12% return on equity. When you're talking about the dividend yield, it continues to remain quite healthy, with NTPC declaring a dividend of 6.15 in FY21 along with a small buyback. When you're talking about what exactly other brokerages are saying, and especially when you're looking at it at the company in terms of how exactly the company has given very aggressive targets when it comes to its ambitions in the renewable energy capacity addition is concerned. Motilal Oswal in fact notes that NTPC continues to provide a steady performance given the regulated nature of the business. The company has ramped its long-term renewable energy capacity to 60 gigawatts by 2032, earlier 32 gigawatts by close to 2030. The company's plans, according to Motilal Oswal, does seem quite ambitious, implying a 5 to 5.5 gigawatt of RE additions per annum over the next 11 years. The NTPC has since taken very firm steps in order to go ahead and improve its renewables footprint. Approximately 3 gigawatt of renewable capacities are already under construction and expected to be commissioned over the next 2 years. Watch out for this particular stock in terms of its renewable energy addition and its strong growth profile that the company has projected, along with healthy payout ratio.